cut their spending that might be worse? What were investors actually looking for?
Yeah. Yeah, thanks so much for having me. And honestly, I think Mackenzie did part of my job here for me. I mean, on your question, it's really about striking the right balance right now. I don't think anyone's hoping for CapEx cuts or spend to go down, right? If Google is pulling back spend, we know, or if Alphabet's pulling back spend, we know that their cloud competitors are not going to be doing that. There is the right balance to strike here.
I would imagine that would be far worse if Alphabet came out today and said we're going to cut our capital spending on AI. I think that stock is down a lot more than 5%. What do you think?
Absolutely. I think that would be a big red flag, and there'll be a lot of questions around capacity overbuild and ROIC. Management talked about, Sundar said that they are more confident today on their ROIC and what they're spending, even though they're spending more than they were a year ago. So they see themselves in a really good spot here. Demand remains really strong, and I think those are the things to focus on right now.
So is there like a Goldilocks scenario with capital spending? The porridge, the AI spending level, Yigal, is just right for investors? Or is today, and we always, listen, we're CNBC, we need to find a reason why things are happening. But after a 66% gain, maybe the entire tech space, Alphabet included, was just ready for a bit of a pullback.
Yeah, I think we've seen that around the market a little bit, but this is a difficult question for investors to grapple with, right? You are seeing significant spend upfront to recoup gains in a year or two and set themselves up for this. Meanwhile, it's a pretty competitive environment, right? You're seeing the other clouds do it. You have the other frontier model companies that are building out their models. So that the management got a lot of questions on the earnings call about their model progress and how they're competing there. But our view is that Google is just really well positioned on this end-to-end stack. They have the models, they have the chips, they have the cloud business that they're monetizing really well, and search has been a phenomenal business. It was in line with expectations in 2Q, but we're seeing the AI experience on search give it a bigger moat, right? And that wasn't what the expectation was a year ago.
I guess the one investor question that I keep hearing or keep reading, Yigal, around not just Alphabet, but any of these big AI spenders is, will they ever make the money back? You said return on invested capital, ROIC, right? Like $20 a month for me, maybe the enterprise side for you. It's real money. They're making tens of billions, but they're spending hundreds of billions. Do we know when they're ever going to make that money back? Because if there's a day where they realize they may not, that's when you're going to get the spending cut.
Right, and that's exactly the question. And we flow dipped to negative really for the first time since the early teens at least, right? And so that I think that's a number that maybe kind of spooked people as well, even though I think that's sort of where expectations were. We knew this was coming. But Google, Alphabet is positioned well here, right? I think they are already monetizing some of this, right? You're seeing the strong growth in cloud, 82%. Up from low 60s in 1Q, so sequentially stronger. They're starting to sell their TPU chips. That's going to become a much bigger factor next year. They're bringing on capacity that can help them accelerate that growth or keep that growth going on longer in the cloud business. Meanwhile, search, again, is growing well. It's monetizing really well. It's building a better ecosystem. And so they are monetizing. They're monetizing on multiple fronts. And I think that's why Google is well positioned here. You have to see over time the